Welcome back to the Money Level Show. I got a good friend of mine, good guy. He brought me on his channel, Rodrigo from the Coup Media. This is the first live stream we've actually done, and so I just wanted to be able to get this going and kind of get in the flow of doing this. And so he's actually coaching me on in the background. I'm just like, hey, you got to do this, you got to do that. So I appreciate you giving me those tech tips and stuff. And so I want to bring you on so we can talk some of these things with investing and macro landscapes and all of that, because you go into some deep detail on your channel, the Coup Media, which I'm going to link in the description below, where you guys can go check it out and subscribe. So Rodrigo, how you doing today?
I'm doing good. I'm doing great. Even better that I get to chat with you and hopefully collaborate a little bit with your community.
Yes, it's been a while. I think I was on your channel a few months ago, and we had to cut it short. And then I was like, I need to get them back on. And so now I'm on vacation, so I got a lot more time. I'm like, yeah, I need to get them on, so we don't have any limitations with time and all this stuff with 9 to 5s and stuff. So, and I actually been talking to my audience a lot about that, just with whenever you're working a 9 to 5, just like how much limitations it could put on you as far as like what your gifts, your talents, and things that you're trying to do. And so I'm really just trying to help my audience understand that, and as well as join me in the journey for financial freedom.
No, definitely. I definitely went down that same journey. Coming out of college, I tried the entrepreneur thing, realized I wasn't ready for it, right? So I had to go into the corporate world and pretty much learn my stripes that way, right? So I've been through that struggle. I've been through, trying to go up the corporate ladder and realizing just because you're going up the ladder doesn't mean that it's going to be better, right? Or it's going to be better for your mental or just a better situation for you overall. So I understand that grind of trying to transition from corporate world to the entrepreneurship world, how scary that could be, but also the trials and tribulations. So I try to talk about that a little bit as well on my channel. But I just want to get across, I understand where everybody's coming from, because I started in the same spot.
Yeah, most definitely. Now I see we got a viewer on there. This is the first live of the Money Level Show. Drop a comment, hit the like button and everything. We'd love to see who you are, who's tuning in. So that's good to know, man, that you're educating your audience on that, because it's a part of a big part of this is that we're all trying to protect our wealth. We're all trying to make sure that we don't become a victim of whatever's to come down the line, whether that's you and I both do macro, and we know like the situation with the debt, debt at all-time levels and all those types of things. And so in regards to macro and just your background, what kind of drew you to the whole macro landscape and investing? Like what brought you there?
I would say it was kind of by mistake, like definitely in regards to my conversations on YouTube, because when I started on YouTube, so my background's in sales and marketing. So when I hopped on YouTube, I stuck with what I've been doing for the past 8 years, and that was building sales teams, training salespeople, breaking numbers at whatever company I was at.
Mm-hmm.
So that, I figured, I got this skill set. I might as well share it to the world. Everyone needs sales skills. Everyone needs marketing skills. So this is going to be a breeze, right? But I started doing videos. Really wasn't catching on. But another thing that I was also getting into was gold and silver, precious metals, right? I started educating myself on that topic, and started investing in myself, like buying my own. And through that education, I realized that there was just a lot of things that the average American didn't know, like whether it's inflation, deflation, currency manipulation, just that whole world, right? Everything that involves around money, currency, and interest rates. There was just a whole nother world that the average American didn't know by. And then when you factor in Black Americans, it was like almost damn near nobody knew about this stuff, right? So I was like, okay, there's a opportunity here, right? Because this is very valuable information that everyone needs, but there's not too many people talking about it, and there's definitely not a lot of people that look like me that are talking about it. So I said, look, there's an opportunity for me to fill that void, so I might as well go through it. And it's been working.
Yeah, that's good to hear because you know, that was kind of like when I was branding my channel and everything. Because for me, like, you know, I tell the story all the time. When COVID hit, you know, I had zero savings, zero emergency, and I was just like, I'm at the mercy of my job, and I did not like that feeling, you know. And I did also didn't want to live, you know, hand to mouth from the government. And so it was really just like, man, like I got a family to take care of. You know, I'm in a situation I need to get out of. So I started just reading and just consuming hours upon hours of content. And you know, just from even conversation with just some of my family and friends, like, you know, I could tell like this stuff, you know, and they, you know, the average, I mean, especially for like, you know, black people, but like the average American that works a 9 to 5, you know, or whatnot, does not think about this stuff, does not know how this stuff affects them, does not know how, you know, these policies and how, you know, you have the good old boys club, you know, who are benefiting from all of this and everything with currency manipulation and stuff. Like they don't know anything about this. And so that's very important that you brought that up because that's definitely opportunity. There's not a lot of people that look like us, you know, that are doing this, and so it's good to have you in here. Being in macro, you know, we have like a bird's eye view of things, and you know, looking at trends, we look at trends, we look at what are the long term probabilities of X, Y, and Z. And so when you dive into macro, do you ever dive into like the micro of certain investments, whether that's, you know, looking at different sectors? Oh, let's look at the oil sector. Let's look at, you know, the tech sector. Oh, I believe that this is going to go on because this is what's going on in the macro. Do you dive into that? Why or why not?
Yeah, I mean, yeah, at this point it's become instinctual. And it's because, you know, I learned the hard way. So back in like '07, I left school. I wanted to invest in real estate. And this was, you know, we all know at the height of that real estate bubble. And for me, when I started that, when I took that leap, all I did was teach myself how to make money in real estate, like how to flip houses and stuff like that. Like I had family members, I had friends that were doing it. So I kind of knew the game. So for me, it was just about, you know, you know, really just getting the down payment ready. Then I knew the rest of the process. But the part that I didn't understand during that time was that we were in a bubble that, you know, recessions happen. Like I had no idea what a recession was or what happens during a recession, all those type of things. So going through that, I learned that it's not just about making money. It's about managing money. It's about managing people. It's about understanding the macro of everything, right? Because if I'm going to banks trying to get financing from them, then I need to know what's going on with the banks, right? And they're directly tied to the macro part of it. So, you know, I learned the hard way, right? I had some success early, but ended up not going how I wanted it to go because I didn't understand the outside elements that came with investing in a home. Now, ever since then, right? Ever since '08, '09, right? I took those bumps and bruises, but it exposed to me the holes in my game, right? I understood, okay, I could teach myself how to make money. I could teach myself how to do certain things, but there's still a lot of gaps that I need to learn. So ever since then, I've been trying to teach myself those things, preparing for the next recession. Because I, you know, as I was in it, I was like, man, you know, in hindsight, I was looking, I was like, man, I made all the right moves. I just didn't understand what was going on outside of my world, right?
Mm-hmm.
Like things that I couldn't control, I didn't understand that. So I made it my duty to understand as much as I can. So by the time the next recession comes, I could be one of those benefactors and I could be one of those people who, you know, 10x my money, you know, throughout the situation. So that experience forced me to look to take into account the macro factors when it comes to investment. So yeah, now when you fast forward to today, you know, I see the same type of environment, you know, even though we haven't had that big collapse, I see the same type of environment. So you know, I'm taking a more calculated approach when it comes to investing. I'm not just looking at the numbers going up. I'm looking at, okay, the environment that we're in and what's gonna, you know, what's gonna go up now versus what's gonna stay up, you know, versus what's gonna go up later or what's gonna crash later, things like that. So yeah, it definitely, it's in every decision I make. It's not like a thing that I'm actually thinking about. You know,
Mm-hmm.
it just naturally happens.
Yeah, for sure. You know, in that environment, like obviously, you know, hindsight's always 2020 as we, you know, learn from our mistakes and things like that. So what are some of the specific things you learned, whether that's about diversification or or whenever I mean, obviously you learned that we were in a bubble during that time, and I have a friend of mine, he was a loan officer during that time, and he was doing a lot of mortgage loans. He was very successful. But he was maintaining a lifestyle that wasn't sustainable. And I, and when I communicate with them, I tell them, yeah, it's easy. Anybody can get rich, but like it's how you sustain wealth. And sustaining wealth, you have that aspect of like diversification, protecting yourself, and things like that. So, what are some of those things that you kind of pulled out of that as you go into this, as we're in this new environment where you're able to protect your wealth and also, diversify?
Well, the big thing that I learned was the bust, right? You got to be like, anybody can make money in a boom, right? That's the easiest time to make money. That's where you're going to see, valuations go up. That's where you're going to see a lot of the growth, right? But it's not about the boom. It's about the bust, right? Who's going to survive the bust? Because who cares if you make $1 million in a boom, but then lose it in the bust? You're still broke, right? So for me, it was not about being able to make money during the boom, right? Because everybody makes money through the boom. It was about, at least at worst, maintaining my wealth. So when that bust happens and asset prices drop, now I could go in and ride them up. So that was probably the most key thing to realize, right? Because, for example, a personal example, like, so again, like I was buying homes in 2007 and I was in a good area and stuff like that. But like, if I would have waited a year or waited a year, waited a 2 years or something like that, I could have came up on better situations, because those same houses that I were buying were now 30%, 40%, 50% cheaper, right? Like I got friends who bought homes at 100,000 and now they worth 300,000. They were able to use that to, invest in other things and grow their wealth, right? So for me, when you see these boom bust cycles, I'm not really too concerned about the boom. I'm more concerned about the bust. Now I'm not just waiting. Now, at the same time, I'm not just waiting for the bust and saying, okay, now it's time to go, right? Throughout this boom, I'm evaluating all the markets. I'm evaluating all the different asset classes and trying to pick, not necessarily put my money on winners, but I'm trying to evaluate who I think is going to win. So when that bust happens, so whether it's crypto, real estate, stocks, whatever, when that crash happens, now I already have the companies that I kind of already think that I'm going to invest in, right? I got to see who's going to survive. But now once I see who survives, now I got the cash to go and put in and ride them horses to victory. So it's more that approach of, educating myself throughout the boom. And then when that crash happens, looking for that, trying to use that to explode.
Yeah, that's definitely a good perspective to have, because I mean, especially in this current environment, I do think that some sectors aren't booming right now. I mean, last year we saw the oil sector. If people would have invested in oil, they would have seen some massive profits. I mean, I remember some of these stocks were like just dumb cheap for a long time, and so you do have some companies that are still undervalued or at a good valuation, and we obviously have companies that are overvalued or whatnot. And so, like for me, like personally, I've been kind of just buying into some of the companies that are like, okay, these are good valuations. These companies should actually be here, but this company is actually cheaper. And and if the bust happen, I mean, you obviously have to have some dry powder. I mean, I know for myself, I don't like being in dollars, but dollars do come in handy whenever that bust happens. Whenever you can store value and be able to buy assets cheaper. And so that's a very good perspective to have. So one of the things I've heard you talk about on your channel too, is about inflation. And so we've been getting a lot of mixed messages from the Federal Reserve. 1 minute it's transitory, 1 minute they lost control of it. The next you got one. I think one chairman just came out and said that it wasn't transitory, and so you're getting mixed messages. The media, nobody seems to know what to do. I mean, you get some bad numbers. People are selling off the market, and then they're buying back in. So it's just a crazy environment. So what are you kind of anticipating in this in inflation, and what are you predicting regarding inflation?
So me personally, I don't think there's actually mixed messaging. I think the Fed and central banks are pretty clear on what they want to do and their goal. I mean, if you listen again, if to your point earlier, like if you look at the macro, then come into the micro, right? If you look at the macro and you listen to the Fed chairman, right, the number one guy, Jerome Powell, talk. I mean, from the beginning, he's been saying the same thing. We're not touching interest rates. We're not tapering until 2022, 2023. We're not going to increase interest rates. We're not going to, we're going to keep doing the bond purchases. We have to keep supporting the market with the bond purchase, the 120 billion in bond purchases every month. Like, he's been consistent with that. Now, if you go into the micro and you try to evaluate each little interview that he does, to me, it's still kind of consistent. But then you could try to nitpick and people try to say, oh, maybe they're going to taper here. And that's where the noise comes in. But if you look from a macro standpoint, his message has been the same. So for me, it's clear what they're trying to do. And in addition to that, they will openly tell you that they're fighting deflation, right? If you take the Fed out of the mix, if you take the banks out of the mix, the whole world will be going through deflation. And why would the world be going through deflation? And that's because of technology. That's because we as people get better at everything we do, right? If you look at housing, if you look at anything that we used to build 10 years ago, or we used to build 50 years ago, 100 years ago, we got better at doing it. So in essence, it gets cheaper, it gets more efficient. So the prices of everything naturally drops, right? But the reason why prices are going up is because of the central banks coming in, pumping it up. So for me, it's been kind of consistent. You know what you're going to get from them. Now, the real question is, when is that going to stop? When is the inflation going to stop? Because, we talk about a bubble, but you got to think about a bubble like what it actually is. Like, when you have a bubble, you blow it up, right? You got some soap, right? You blow it up, it gets big, and eventually it pops, right? And what happens when it pops? That's where we see that massive deflation. So I think for us, it's more trying to figure out, when is it going to pop, right? And no one could kind of predict that. But, in terms of the messaging, I think that's pretty consistent. We're going to get inflation until we don't.
Yeah. So do you think the messaging, I mean, because when I say inconsistency, first, it was transitory. And I guess you can get into the nitty gritty of what transitory means. But now what I'm starting to see is they're backtracking from transitory to saying like, oh, it's going to run persistent or, and things like that. And so I think that messaging around whether this is going to be temporary or not is what is inconsistent. And some people are betting on it to be, non-transitory. This inflation is not going to go down, and others are believing that the Fed they have the tools to make it transitory or that they're right in that sense.
Yeah, I mean, I think those are all just terms and phrases to make us feel okay about what they're doing. Right, because what they're doing isn't changing, right? They're just trying to use the right verbiage that we're going to feel okay with, that we could actually swallow that pill. So it's like, I try to use the example of like this past year, these stimulus checks, right? Like, everyone has different points of views on, why we're having this crisis, like whether it was a man-made crisis that sparked or whether it was natural, why are these why if the government's, plan to do this or whether it was just like happenstance, like different point of views, right? But let's run with the narrative of, let's say this was like a planned event, right? The government, or even if it wasn't a planned event, right? The government, the American economy needed help, right? The American economy was starting to collapse. Now, if the government would have just came out and said, look, our economy is horrible right now. We're going to have to print out trillions of dollars and you guys are going to pay for it, right? Like all your taxes are going to pay for this. Your taxes are going up. Your real estate, your property taxes, all that's going to go up. But don't worry, like, people are going to keep their jobs. Or, like everything that's happened is going to happen, right? People just say, hell no, I'm not going to do that, right? So what do, right? They have to create a scenario where you would accept it, right? So in my opinion, that's what governments, that's what politicians, and that's what the central banks do, right? They do what they want to do, but the narrative that they hear is so that we accept it, right? Because no one wants to pay more taxes. No one wants to make it. No one wants inflation. No one wants the prices of their goods to go up. But in order to justify it, you need something to justify it. So that's all we're hearing. In my opinion, when I listen to them, it's all we're hearing is the justification of them taking our money, right? Or increasing our taxes. It's not, it's not them trying to predict the market or trying to tell us. No, they're just trying to justify their actions.
Yeah. Okay. Yeah, that's definitely Good to hear. So, I mean, it's not good, but it's good to hear it from you. So yeah. So okay. So how are you protecting your wealth in this inflationary environment? We're starting to see. I mean, we saw CPI numbers come up. I mean, and it's obviously debatable on if the CPI is accurate or not. And then we're starting to come into this new phase where the mortgage moratoriums are coming to an end or at an end right now. I mean, people are getting evicted. Landlords are like, I need to recoup rent, so they're raising up rent. I think a friend of mine, he was in a 3-bedroom apartment. It was like 1,300 a month. They jacked it up to 1,700, and his apartments was not the best. And so now we're starting to see kind of that aspect of inflation where people are going to have to like pay, whether that was people that weren't paying during the crisis or whatnot. I mean, landlords are they feel like, okay, our values are going up in our properties, we're going to increase the rents. And so that's one part that hasn't been reflected in the CPI. But how do you protect yourself and your wealth during this times? Because we're seeing like the prices of goods and services continue to go up.
Yeah. So first and foremost, just gold and silver. Like I don't save cash. I save my wealth in gold and silver. Right. So, and I've ramped that up over the last couple of years. Now, in addition to that, lately, like over the last couple months, I've been trying to get back into real estate, invest in like income producing properties, multi-unit type properties that are bringing in income, for the simple fact to the points that you mentioned, right? These rent moratoriums were starting to go up, all those different things. So, for me, it's about getting assets that are going to maintain their value, right? So one, gold and silver to maintain their value because people need it to make stuff, but also real estate maintains its value because people need a place to sleep, right? People need a place to stay. So for me, it's about, putting my money in a secure place that's going to be secure forever, right? Or for a long period of time. So, that's what I'm focusing on. Yeah, that's what I'm focusing on. I mean, other stuff, I know there's other stuff out there, but for me, it's about, guaranteed money versus, the probability of getting rich in a short period of time.
Yeah, most definitely. Yeah, and we're seeing a lot of what's going up most in value is these scarce assets, and obviously precious metals being scarce. I mean, real estate is scarce. I mean, especially in a lot of areas where they're having to build more homes, and then you have the scarce materials to make the homes. I mean, we saw lumber go up a lot. And we're seeing a lot of the scarce assets, whether that be Pokemon cards or whatever. we're seeing these scarce assets continue to go up in value, and so precious metals is definitely something that I do, personally. And I'm working on real estate as well. Right now, I'm a current real estate agent, but I'm working on getting to a point where I can own some investment properties. So that's good to hear that you're kind of in that same camp and everything.
So one more thing I do want to touch on, because you brought up like the Pokemon cards, and I got nothing to get against Pokemon, right? I grew up during the Pokemon phase, so I understand the value there and the craze. But another thing that I think people don't take into account, right? At least the people who haven't really, tried to invest through a previous recession or depression, right? Is that the reason why you see a lot of deflation in different asset classes is because when you're faced with high inflation in America, you could say we're on the verge, or we're going down the path to hyperinflation or very high inflation, right? When you get down, just think about the case of inflation, right? You have a normal person, the average American has what, less than 5,000 or 7,000 in their bank account, something like that. So that type of person doesn't have a lot of extra cash at the end of the month, right? Whether it's a couple $100 or maybe it's $1,000 at the end of the month, they don't have a lot, right? So as the prices of everything start to go up, they get to be able to buy less and less stuff, right? So when you get in a situation where when inflation's too high and things crash, people aren't going to have extra money. Yes, the people who have money, they're going to have extra money, but the average person isn't going to have extra money. So they're not going to be able to put money into They're not going to be able to feed the craze into Pokemons. They're not going to be able to feed the craze into any asset class that's not necessary, right? So things like real estate, things like gold and silver, commodity, things that people need are going to go up, right? Because people need them, right? And more people are going to be chasing them. But when you have less people chasing the other stuff, that stuff is going to go down, right? But in terms of investment, I think that's a piece that people need to take into account, because they think you could just ride the wave out, but you're not understanding that when when the bottom falls out and things collapse, you're gonna have less, like, people are gonna have to grab. Like, for example, if someone's made big money in a particular stock or a particular crypto or something, right? But all of a sudden their life is crumbling outside of them, right? There's a very good chance they're gonna have to take those profits and use it to take care of the rest of their life. But what happens when you have millions of people taking their profits to fix the rest of their life, right? So, that's something I wanted to put out there, because it's not a conversation that's being had. Like, people just think that, they're not taking into account that when things go bad, people are taking all their profits off the board. They have to support the rest of their life.
Yeah, that's very important. So investing in the things that people actually need. I mean, right now we're seeing, a lot of scarce things go up, whether that be Pokemon cards, collectible baseball cards, or whatever, those things. But those aren't like a necessity when it comes down to it, when we have either a crisis or a bust. So having the things that are necessity is what's going to protect you even more.
Yeah, exactly.
Okay. So some investors, like, they've been mad at like gold, because a lot. I mean, you get a lot of this comparison with gold and Bitcoin and gold and Tesla stock or whatever, and a lot of people are upset about the performance of gold compared to other assets. And I mean, because we're seeing inflation, we saw in the 2007 2008 financial crisis, we saw gold it went from 200 to about 1800 1900, something like that. And at that time I felt like it was overvalued because we saw that big correction. But so people were, some people were upset. They're like, oh, I could have put this money in the Bitcoin, I could have put this money in here, and made a lot more money. Me personally, I see gold as a store of value and insurance, and I also, use it. I also have it just as a protection against any type of dollar crisis or currency crisis as well. So what words do you have for people that kind of just, think in comparison to other assets when they're comparing gold and other precious metals?
Yeah. So same thing for you. I mean, I look at it as a store of value. I look at it as a store of value, right? But in the sense of that, like, if you're upset about the performance of gold, it's because you're doing it with the wrong intent, right? You're doing it as a get rich quick scenario, right? Because when you use the term store value, you got to understand, like, what do you actually stand, right? You want to store the value of something, and when are you looking to store that value? When things go bad, right? And things aren't bad. So to judge gold now is, you can't even judge it now. It's irrelevant, because the times you want gold, the times you want something that's going to store its values when things go bad. Right now, we're in a boom. We're in the biggest boom our country, this world has ever seen, right? So you're not going to evaluate gold and say, oh, gold is not performing now. This is not the time for gold to perform, right? You need this boom to bust, and then you could try to evaluate gold. Now, if we have a bust and gold stays where it's at and gold doesn't perform, then you could say, oh, gold has performed bad. It wasn't a store of value. I could have put my money somewhere else and it performed well. But until we actually bust, the game hasn't started yet, right? The party didn't even start yet. So if you're judging the performance up until now, you're not looking at it right. You're not looking at the scenario through the right lens, right? It goes back to, how we started this off, right? Like, I went into the real estate game not understanding recessions, right? So it's the same thing. Like, you got to know the climate to understand its value, but also the potential of its performance moving forward. So, yeah, I mean, so that's what I would say, right? The party didn't even start yet, right? Like, if you're investing in gold and silver, you can't be worried about now. You got to, if that's your concern, accumulate it now. Then you judge its performance after the bust. I mean, until the bust happens, there's no point of even bringing up its performance.
Yeah, definitely. What's your take on, like, just the current price of gold in relation to? I mean, gold has a different type of market because you have big banks getting involved with futures. You got paper contracts, you got stocks, all this stuff that's kind of influencing the price of gold, and we're not seeing like its true value for what it is. I mean, because if you and I go buy gold now, we're definitely not getting that spot price. Even when we see gold and silver go down in price, like it takes a long time for the prices of it to even drop. So we're seeing like the value of it itself isn't really tied to the price, the spot price of it, and what the contracts are saying or whatnot. So what's your take on that?
So before I get into that, just one more thing I want to back up. So one more thing I want to add that'll kind of go into that. So one thing about the performance itself too, I want to add is that gold and silver have performed. I mean, silver for the most part has performed, over the past year or so. So or 2 years. So for example, like me, a year, you got to think last March when things dropped down, it got as low as $12, but you could probably get, the cheapest I got during that time frame was for like 15, 16, 17 bucks silver an ounce, right? And if you look at it now, right, me personally, like I said earlier, right now I'm in the process, I'm trying to buy a multi-unit property, and because I save my currency, because I save in precious metals, right, I had to pretty much sell some of my silver, right? And I got a good return. Like my down payment, like the profits I made over the past year is going to pay for my down payment for this property. So in essence, I feel like I'm getting it for free, right? So if I get if I close on a property, right? So I did want to mention that when in regards to the performance. Now, when you talk about sorry about that. What was it?
So everything. So pretty much, everything asset isn't going up straight in a straight line. Like, we're seeing a lot of like, whether that be a short squeeze or whether we see cryptos or whatnot, we're seeing stuff go in a straight line and people are comparing it to that. But when you look, based off where silver was last year and even where gold was, like you're still making money on that.
So we all know that gold is, the price, and silver is, it's being manipulated. Like to your point, there's different ways that they do it. But one of the big things that I try to cover at least once a month on my channel is who's buying it. You mentioned the central banks are buying it. So I usually do a video once a month, of the central banks and what they bought, just to remind people that you have banks that are buying tons of this thing every month, right? So it's not like a situation where we have people that are buying and people that are selling, right? Because most people aren't selling unless you need it for a short term, but that still doesn't compare to the people that are buying. Now, moving forward, one of the big changes that I don't think people are taking into account, that I feel like, I pride myself on, that I talk about, is that, when we see a big price gain in gold, like, because if the price is being manipulated, someone's manipulating it for a reason, right? To benefit themselves. So in my opinion, right, based on what we're seeing from other countries and other central banks, in my opinion, if we're going to see a change in the price, it's not going to come from America. It's going to come from outside of America. It's going to come from outside pressures, and you're seeing that. You're seeing different countries that are coming out with gold-backed currencies. You're seeing different. You're seeing them come out with gold-backed currencies. You're seeing them starting to come up with new exchanges where they're going to start, pricing the commodities, in their currency and stuff like that, right? So I think when we do see an actual real, if we do see, the realest gold price that we could see, right, the truest reflection of it is going to be because other countries force the price to get there. It's not going to be because America and American banks decide to just let it go up, right? So I think it's going to be outside pressures that actually influence that price. I'll just leave it there.
Yeah. So China launched their digital currency, their digital yuan, and I was kind of just watching the interview about a few months ago where they were talking about the trend in China is that they're buying these gold jewelry as well as these gold pieces that they would give on like weddings and stuff like that, and seeing that many people are going to gold over there because of this whole digital yuan thing, and I mean, if we get into the central bank digital currencies and whatever purpose they have for it or whatnot, I have my own idea for it, but what's kind of your take on that? I mean, because obviously, China has, launched their digital currency. China does have aspects of their country where they do more monitoring and stuff like that. What's your take on that?
So I think, we all know that the U.S. and China are at war. The U.S. is at war with a lot of people. And I think when you're at war, you're willing to do whatever it takes to win. And I think gold is going to be one of their weapons that they use to win this war, right? I mean, one of the biggest disadvantage that America has right now is our debt, right? Our debt is crazy. We have way more debt than everyone else. So I think by them putting gold at the forefront, like if they were to have, like me personally, I think eventually there's going to be there's going to be government gold back currencies, right? That's in my opinion. And the reason why I think that's going to happen, again, it goes back to war. I think that's an easy way to replace the dollar. That's an easy way to kill the dollar. That's an easy way to, surpass the US if you're trying to become the #1 superpower. So, I think it's definitely going to be a weapon that China uses in order to propel themselves forward. But, we've also heard other central banks like Indonesia, Russia, Iran, Venezuela, Saudi Arabia, the UAE. We've heard a lot of different central banks come out and say that they want asset-backed currencies. So I definitely think it's a real thing that's going to come moving forward. And even if it's not coming from the central banks themselves, we have companies that are coming out with gold-backed currencies, right? So if you're in a situation, I would think, all of us that are being educated on cryptos and gold and silver, if you're in a situation where we're in 100% digital fiat world, but you have the opportunity to buy a gold-backed crypto or gold-backed digital currency, I think a lot of us would opt for that. So I think between the pressure from private companies coming with gold-backed currencies, but also the pressure of, I think other countries doing it as well. I think that's going to be the driving force that, one that takes down America, but two, that drives the world economy forward.
Yeah, definitely. Okay, so what's your take on this whole central bank digital currency, talk? I mean, obviously we have Congress; they're meeting. I think it's Congress or whatnot, Senate or whoever. It might be the same thing, but they meeting right now to talk about regulations for crypto. We had China ban mining of crypto. And we're seeing like these digital currency talk, central bank digital currencies. So how are you absorbing that? How are you thinking that this is all going to play out? And what?
So it looks like Daryl got, I guess he lost connection. I don't know if it looks like I'm still live, but it's not, but I'm still here. For the people still watching, I know he was bringing up the CBDCs. It's a topic that I talk about a lot on my channel. So if you want to hear me go deep dive into that, go ahead and do that. Yeah, I was just trying to fill the air till you came back.
I was not expecting that. I was like, what the heck happened?
Yeah, I'm used to doing the live, so that one no problem.
Yeah. So what's kind of your take on that? These central bank digital currencies that are being launched, and what are you predicting is going to happen with that, and how are you positioning yourself for that?
Yeah, so I mean, this is like one of the key topics I talk about on a regular basis on my channel. I'll probably do a video on this like once a week. Right? So all right, so I mean, I could talk about this for days, but the one thing that I want to get across when it comes to CBDCs that I'm realizing that most people aren't talking about is, yes, we all know that they're using these to control us, right? To better monitor us and track us and all that different stuff. Now, some people are more optimistic or pessimistic, on the level of the extent that government are going to use this, right? Some people are like, oh, government, they already track us anyway, whatever, it doesn't matter. And you got other people saying, no, this is serious because, yeah, maybe this president might not do something, but what about the next president or the president after that? Like, once you open up that door, they could do whatever they want, right? So yes, I think everyone understands that point. But the one piece that I think that most people really aren't taking into account is that governments also need central bank digital currencies to control their financial situation, right? They need to be able to control from other countries, right? From other threats, because, like, for example, we've seen it with, for example, like El Salvador, who adopted Bitcoin, right, as legal tender. And the reason why is because they don't want to have they don't want to deal with the dollar. They don't want to deal with the repercussions of holding dollars. So they want to out, right? Other countries, so all right, so every country is coming out with CBDCs, right? And the big piece and the big reason why this is so important is because now these other countries have the ability to get around the SWIFT, right? Up until now, over the last 50 years, the US has been able to control countries and get them to do what they want them to do based off sanctions and tariffs because they control the SWIFT and they control the dollar, right? But now that all these countries are going to have their own CBDCs, they're going to actually be able to get around the SWIFT or get around of using the dollar, right? Now, with that being said, whoever, if you don't have your own CBDC as a country, you're going to have to now be relying on another country's currency, similar to what the whole world is doing with America right now, right? So the CBDCs are going to be used to control the people inside your country, but two, it's also there to make sure you maintain control of your monetary, got the word they use, but to control your whole monetary system. Right. If you're now relying on the digital yuan or the digital dollar, or the digital euro, now you're out of that conversation. You have no control of interest rates. You have no control of inflation. You have no control of all the things that we're going through right now. So at least, so yeah, I think that's, one of the big pieces that people are leaving out. That like, yes, it's there to control your people, but it's also to make sure that you maintain control of just your whole financial situation in your country. Because if you're relying on someone else, then whenever they do something bad, it could impact you and your country, right? So I think that's a big piece of the central bank digital currencies that people aren't including into the conversation, because there's going to be a fight for that, right? Once everyone has digital currencies, now it comes down to, okay, who's using what currencies? Like who's going to have the strongest currency, right? So if you have a country like China who's trading with everybody and everyone's using their yuan, obviously that one's going to have a lot of strength. But if you have another currency where now, like here in America, where right now, most of the world is using dollars, but what happens in a situation where half those people half the world is no longer using dollars, or 75% of the world is no longer using dollars? What is going to happen to that dollar, right? You would imagine that if 75% of the people are no longer using it, that is going to lose a substantial amount of value, right? So, and if it loses a substantial amount of value, that means the cost to buy things outside this country are going to go up, right? So yeah, for me, it's one, the CBDCs are going to be used to control us inside, but then it's also to make sure you maintain control of your country and the decisions, that the government can make with it.
Yeah. So it's pretty much a tool that they need. And then any tool can be used for malice, or it can be used to actually, try to, help or fix something. And so I get what you're saying.
But so also, yes, because you also mentioned, the regulations and all that stuff. So, the regulations is all there to make sure that they maintain control of the money. Because you think about it, a central bank, what do? They're selling us money. Right? They don't sell a product. They don't sell a service. What they're doing is they're selling us money. They're saying, look, our system, you guys done it before, right? The people, you guys used to walk around with gold and silver and all this stuff, but, we got a better system. We got these fake fiat dollars. So all the regulation is doing is protecting their system, right? To make sure that they still have the dominant monetary force out there. So when it comes to the regulation, that to me, that's all it is. It's making sure that they stay in control.
Mm-hmm. Yeah, for sure. And so I see we had a few viewers in. Be sure to leave a comment, hit the like button so that this gets out to the other subscribers and gets out in the YouTube algorithms and stuff. I appreciate y'all for tuning in today. So anything else you want to share before we head out today, Rodrigo? We're obviously going to leave your YouTube channel and tag that and everything so that people can be sure to go connect with you there. You go into some really in-depth concepts and have a lot of great material there. What are some other things that you would like people to know?
Yeah, so first and foremost, go to my channel. If you like this conversation, go to the channel, subscribe. I definitely go way into more depth into a lot of these topics. It's actually kind of a struggle to like only kind of condense it down to like a 1 or 2 minute answer, because I usually go off for, pretty long rants about this stuff. But But yeah, go to the channel. You know, I got a lot of new stuff going on. I actually signed a couple partnerships with different companies lately, so you're going to see a lot more. You know, the direction of the channel, I would like to feel like it's going to be elevated. A lot more. You know, if you're an entrepreneur, if you're looking to start a business or just grow your business in general, I'm going to be dropping a lot more content geared towards entrepreneurship and building a business, growing a business. So if you're interested in that, tap in there. But also on the flip side, if you're just more interested in precious metals and how that's going to play into the game, you know, I talk about that as well. And then the CBDCs, like I said before, I talk about that. So yeah, I mean, if you like this conversation, you know, you're going to love the channel.
All right, most def. And then one last question: how do you think this all plays out, and what are you doing for you and your family?
I think this is the greatest wealth transfer we're all going to see, right? And I'm treating it that way, right? This is the time I see, you know, my family, we do good, right? I like to think, but you know, I plan on taking it to a completely different other level within the next few years. I think the opportunities are there. It's just about making sure that you're not reacting off emotion, but instead, you know, you're taking calculated risk as you're moving forward. So yeah, I mean, as much, you know, my channel, it may seem like I try to point out all the bad, but those bad are all opportunities for you to make money. So that's how I see it. It's going to be a lot of tragedy. We're going to see a lot of people go broke, a lot of people go poor, a lot of people get pushed from the middle class to poor. A lot of people are going to be dependent on the government, all of that type of stuff. But at the same time, there's going to be more opportunity than ever to get rich. So that's what I'm focusing on.
Most def. Well, appreciate you for coming on. We got to do this again, y'all. So we're gonna have to have Rodrigo come back and give us some updates on some of the things he's doing and get some of his takes on some of these things as they continue to unfold during this great wealth transfer. So appreciate you for coming on, bro.
Thank you for having me on.
All right.
Peace.